drive reckless. Keep the pen handy in case it start to give tests. I'ma pull up in the G playing that pot smoke. I'ma let my NFTs hang like Picasso. They saying life's a game, why you playing like bots though? Ain't that a scary thought? Head running strolling around the pot just to hand it off.
What's up, guys? It is Thursday, December 8th. It's 9:15 a.m. and this is the crypto newsletter. So we had breaking news yesterday. Vanguard quits the net zero climate effort, citing need for independence. So we've been covering the climate scenarios for a bit now. And this is like shockwaves through. Vanguard's huge. It's like a BlackRock, like a Fidelity, a VanEck. Vanguard Group is pulling out of a major investment industry initiative on tackling climate change, the world's biggest mutual fund manager said on Wednesday, explaining it wants to demonstrate independence and clarify its views for investors. So there we go. And building off of that, so next week, the week before December 22nd is going to be huge. 4 historic events are scheduled to take place, maybe even more I'm unaware of. So BlackRock subpoenaed by Texas Senate panel over the ESG issues. Hearing is December 15th. Committee requests at least 1 of 6 BlackRock executives, including the CEO Larry Fink, to attend hearing at which legislators will review the documents. Then you have here, this has to do with like the voting of the election back 2020. New House Financial Services Committee to hold hearing entitled on December 13th. Reports hearing is titled Investigating the Collapse of FTX Part 1. So they're going to subpoena him if he doesn't voluntarily show up. The SEC to vote December 14th on proposals that could overhaul Wall Street trading. If passed, will be one of the biggest changes to the American equity markets in nearly 2 decades. And I believe they were trying to slide some ESG kind of way of valuing companies in there too. So we're seeing kind of 2 sides of the coin here. Vanguard quits the net zero climate effort. Meanwhile, BlackRock's steamrolling ahead with it. We'll have to see with these hearings and everything like that. Then other huge news, R3, and remember R3 is partnered with the DTCC for Project Ion and a bunch of other blockchain initiatives, CBDC pilots and stuff like that. We're excited to announce that Vanguard, so building off of Vanguard, has deployed Grow Inc.'s DLTA back office platform for global assets built on Corda, a huge step for blockchain in Australia's financial services industry. Read the full press release. So blockchain goes live in Australia as Vanguard deploys Grow's back office blockchain solution for fund administrators, and it's built on R3's Corda. So I go to try to click on this link, right? And it says file not found. So I'm very confused about that. So maybe they took it down or something, but that was yesterday. ECB, European Central Bank official, says energy intensive crypto should be banned. Proof of work. Crypto assets should be banned if they are too energy intensive. Investors have been caught in the textbook definition of a bubble, lured by the promise of ever rising prices. And he said that it echoes a Ponzi scheme in a Wild West through the collapse of crypto exchange FTX has revealed flaws in accounting and risk management. And he said crypto would likely continue to attract investors looking to gamble. It's difficult to see a justification for the existence of unbacked crypto assets in the financial landscape, saying they're too volatile and inefficient to use for regular payments. The FTX debacle will likely send investors towards decentralized exchanges, he said, adding that those exchanges will be harder to regulate and are liable to amplify financial shocks. Crypto assets deemed to have an excessive ecological footprint should also be banned, he said, in a likely reference to platforms like Bitcoin that use an energy-intensive mechanism known as proof of work to validate transactions and secure their network. All right, so we did a Flare deep dive yesterday, right? What if, right? There's an international kind of ban on proof of work coins. So that would mean Bitcoin would be no longer able to validate transactions. But at the same time, too, there'd be no more Bitcoin to come onto the market, because if you can't validate the blockchain, then these miners aren't getting rewarded with new Bitcoin. So all the Bitcoin out there is what is going to be in that scenario. I could see a scenario like that playing out, and then Bitcoin switching to a different consensus mechanism, or maybe with the likes of Flare being able to validate transactions utilizing Flare or something like that. That could play a role into it. All I know is that Chris Larson has been pushing hard for Bitcoin to change from proof of work to a different consensus mechanism. And with Flare launching soon and all the stars aligning with that, that could play a role. So the ECB's skepticism about crypto is nothing new. Panetta is considering whether the central bank itself should issue a digital currency. He set out some criteria for apps and wallets using the digital euro. Then we got the RBI. So I think this is the Reserve Bank of India. Yep. Is working to make CBDC transactions anonymous. There's no difference between CBDC and banknotes as far as the law is concerned, RBI governor says. To ensure the anonymity of CBDC, the central bank is looking at a technological solution. And yep, so they're trying to include the anonymity factor, just like how we spend cash today. Like, you know, it's not being tracked and traced digitally and everything like that. What we purchase, right? They're trying to include that in the CBDC. How much I believe that remains to be unseen. But on top of it, India launched an ATM that dispenses gold coins and allows customers to buy the precious metal on real-time prices with a debit or credit card. This is sick. So it looks like 1 gram of gold. But yeah, I mean, like, this is really, with everything about to unfold here, I'm going to really be looking into stacking up some physical gold and silver, obviously securing the assets on the ledger, and just preparing for this event. I mean, like, from the market update today, looking at the charts, it does seem like a big move is on the horizon. We're days away. So I want to be, you know, kind of positioned now and not wait till last second, right? So if, you know, whoever has been getting physical gold and silver, it's the right way to go. Whoever's been stacking up these low discounted cryptos, the utility based cryptos, it's the way to go. Hong Kong's Pando Finance launches blockchain themed ETF to give investors a taste of cryptocurrencies. So meanwhile, as the market's selling off hard, everybody's scared, you're seeing these institutions launch these products to give their institutional investors exposure to cryptos and blockchain. So like the train is still moving. It's a matter if you fell off or not. And if you fell off, I'd get back on soon before the train really is gone for good. Telegram introduces no SIM sign-ups with blockchain-powered numbers. This is interesting. So popular messenger Telegram now allows users to open accounts without the need to provide their mobile phone numbers. With the app's latest update, they can log in using blockchain-based numbers instead, and they can be purchased with cryptocurrency on the Fragment platform. Then we have this on top of all the other institutional stuff going on. Institutions to tokenize $25 billion in off-chain assets in 2023. VanEck executives predict. The fund manager's head of digital asset research says Bitcoin could hit a low of 10,000 and a high of 30K in 2023. Executive at fund manager VanEck are bullish on security tokenization accelerating in 2023 and believe sovereign institutions could be the main driver of a projected Bitcoin price increase in the second half of next year. The projected momentum around the use of blockchain technology is set to guide the firm to focus on crypto native products going forward. Yeah, we're seeing a lot of crypto products being launched. Fidelity launching, BlackRock launching, VanEck. You know, we're seeing all these things come to light. So Peru president ousted and arrested after bid to dissolve Congress. We've been seeing a lot of things across the world as far as like government type scandals going on, like things like this. I mean, we just saw in Brazil. Then we saw in the US in 2020 with that election. We saw in China cabinet members being just kind of ushered out of the where they hold their meetings and everything like that. So things are weird in the world right now as far as governments, power, and just like everything like that. There's like a restructuring going on, it feels like, or just a total takeover. I'm not sure about this whole thing with Peru and the president ousted and arrested, but it could just be a total takeover. So just crazy times in the world, man. It's time to prepare. It's really no joke. So the untapped segment in Middle Eastern banking. Port reveals a great opportunity for newcomers to address the unmet needs of the region's unbanked amid the massive expansion of the fintech sector in the coming years. So I can't get into this, but it seemed like a pretty interesting article. So it's all the same verbiage that Ripple uses, the untapped, the unbanked, their fintechs, right? So like same kind of verbiage. FTX founder Sam Bankman-Fried is said to face market manipulation inquiry. So they're speculating now. We're getting some clarity as far as how this Luna thing went down, that this guy was at the center of it all. So we'll have to see what comes out in that hearing later this month. Then we have PolySign is currently building Atomic Net, which will link third-party custodial accounts across different asset classes, digital and non-digital, through a common protocol. The Atomic Net platform will be regulatory compliant. Because if you want these institutions to pile trillions of dollars in, there needs to be a safe, secure, and regulatory compliant custody solution. PolySign is the answer. They've been working on this for years now. I believe I'm going to do a PolySign deep dive because PolySign is so huge and nobody's, besides the XRP community's got their eyes on it. But once PolySign's launch, once Flare's launch, once this XRP case is wrapped up, there's domino after domino ready to fall here. And it's all to the benefit of what we've been watching these past years now. I mean, we got our finger on the pulse on this. So PolySign is going to be huge. It's going to be the solution to the custody problem. And I'll show you in the deep dive later today more facts about the custody and how that's kind of basically what everything's waiting on at the moment. PolySign, you can invest into it on pre-IPO shares on Link 2, but you have to be an accredited investor. So I won't dive into that right now. Then this is from the B.I.S, the role of non-bank financial institutions and cross-border spillovers. This is from today. The growing presence of non-bank financial institutions helps to develop financial markets. It can also impact the country's vulnerability to cross-border spillovers. The risk of cross-border spillovers is especially acute for NBFI's dollars positions. Other potential sources of spillovers include currency and liquidity mismatches, and use of leverage and herding. Evidence about whether the greater involvement has aggravated the pro-cyclicality and intensity of cross-border spillover is mixed. Just that all the same cross-border spillovers, liquidity, currencies, they're setting the stage. So then Jim Rickards, I mean, we've been following him for a long time, years. I read all his books, but he just released another one and I ordered it. He's on the money. This guy's on the money. So after I read that book, I will tell you guys what I find and the predictions that he makes, because he called so many things before they happened through the books that I read from him. So I'll be getting this soon. I'm going to read it probably in a week, and then I'll let you guys know what he's expecting next for the economy. And then an initiative to launch the service of paying the salaries of retirees residing in Arab countries through the B.I.S platform. There's a multi-currency platform. It will be interesting to see if XRP is eventually utilized in a new use case. Buna, run by AMA, is XRP enabled. So United Arab Bank goes live with Arab's monetary fund Buna platform. It's XRP enabled platform. And then we have this in the Wall Street Journal. Ripple did an ad. Think crypto is none of your business. Think again, the world has changed, but finance hasn't changed with it. It's not fast enough, not efficient enough, not innovative enough. If you had enough of enough, then you're ready for a new approach. You're ready for money that moves across borders in seconds, not days. You're ready for markets that never close. Quite frankly, sometimes I do wish the crypto markets close. We need a break, one day or another. You're ready for central banks with advanced digital currencies. You're ready for a transformative era in finance. You're ready for crypto. And that's the thing, man. We're so ahead of the game as far as what the future and the trends are going to be. You want to really squeeze this moment for what you can take it for. If you're watching this right now and you understand everything that's being presented right now, you have such an edge. And you could start preparing whatever. If you have a business right now, how are you going to implement Web3 into it? Or if you want to get into Web3 and have a job in it, start looking on LinkedIn, start looking on Indeed, and getting tied. You could go work. I'll give you a referral to Fidelity Crypto to work. I worked at Fidelity before, and I could get you a crypto role there if that's how you want to approach it. Or if you wanted to go off on your own in Web3, that's another option too. There's just so much opportunity as far as 99% of the world does not understand this stuff, but it's going to affect the whole entire population, every single industry. And we're the small percentage that understands it. So there's a lot of opportunity further than just investing, and just kind of hoping, right? I mean, we all know that this is going to play out, and we all are well aware how big this is, but try not to get complacent. Start learning some of the charts, taking actions into your own hands, or start kind of thinking of ways how you can apply Web3 into your own business, or kind of ideas that you wanted to embark on in the past. Now you can kind of tie them back in, because now you have a new model that you can approach it with, the Web3 model, right? So now we have, so December 14th, that SBF is going to go and appear for the hearing. And then so far in 2022, this year has been the worst annual year-to-date return for 60/40 stocks bonds portfolio in the past 100 years. When I was at Fidelity, man, they make you drink the Kool-Aid. I didn't want to tell people to buy bonds when I knew all that stuff was going on. right? Like, so that's why I had to leave. I couldn't sell a lie to, you know, people to put their money in just trash. Like bonds are just trash. And but that's the Kool-Aid. You got to sip it. So that's why I had to leave and I had to go and do what, you know, I was doing anyways. Every day I was watching crypto news, you know, doing my deep dives, but now being able to present it to you guys, it's definitely a humbling feeling. It's a blessing. So hopefully you guys are seeing some value from this. But yeah, I mean, like, you can't, even though they're investment advisors, they're supposed to be acting in your best interests. They're all drinking the Kool-Aid there. So you need to think for yourself on this, and you need to see what should your investment portfolio, what should your wealth management strategy be, because they're setting you up for failure. Look at that. It's not right. It's not right. But if you're watching this, then you must be in the right places. Then we have Bank of International Settlements. Foreign exchange settlement risk persists because existing settlement arrangements to mitigate risk are unavailable or unsuitable for settling certain trades, or market participants find them too expensive. What can be done about it? Let's see. So foreign exchange settlement risk, an unsettled issue. So the yuan to the dollar, December 5th, 2022, 3 days ago. So it's, I mean, like, they're just keep putting out like publications and articles about all the problems that XRP and RippleNet has the solution to. This foreign exchange spillover, mechanisms to reduce settlement risk, right? Pre-settlement netting. Why settlement risk remains. Recent industry engagement by the B.I.S. Committee on Payments and Market Infrastructure has highlighted factors that limit the adoption of payment versus payment settlement. These industries' outreach efforts form part of the broader G20 program to enhance cross-border payments. So they're talking about policy measures and innovation to boost risk mitigation. Private and public sector stakeholders, including central banks, are collaborating to foster greater adoption of payment versus payment. The Global Foreign Exchange Committee, which comprises central banks and market participants, has strengthened its guidance on settlement risk in the Foreign Exchange Global Code, a set of principles of good practice in the foreign exchange market. The code calls for market participants to use PVB if possible or reduce their risk exposures through other means such as netting, and has the support of the Basel Committee on Banking Supervision. So in the deep dive today, we're going to be covering Basel 3 because it's being implemented January 1st, 2023. That's less than what it's like 22, 23 days away. So we're going to do a deep dive for the next video here. So if you haven't already, subscribed to the YouTube, click the notification bell and get updated in real time when we post. So let's keep going. We see that they're expecting to publish their final report in 2023. We're in the end year, like 2023, like transition to 2024. Like, this is all going to play out. I mean, they're doing their final reports. They're gearing up. They're building the narrative. And yeah, like, even right here, private companies are also developing new services that complement existing PVP arrangements by targeting additional currencies and providing more options for users to manage intraday liquidity. Incumbent PVP operators plan to expand their services to EME currencies, and small fintechs are looking at new ways to enable PVP settlement. For example, one new solution allows users to synchronize settlement on the accounts of multiple Nostro providers using distributed ledger technology rather than settling over the accounts of a single institution. As the future of payments may involve the use of multiple central bank digital currencies, the B.I.S. Innovation Hub and the New York Innovation Center have experimented with settling wholesale CBDC using PVP and Project Jura and Project Cedar, respectively. So yeah, everything that we've been tracking, it's wrapping up here. Banks can play a pivotal role in the net zero transition in addition to managing their own risks and opportunities. To support banks on navigating these issues, they have their sustainability analytics have joined forces. And yeah, so how are they going to do that? How are they going to fight climate change with central banks? By going to a central bank digital currency. Then this is here. So this is Jesse Powell. He's the CEO of Kraken, the exchange Kraken, and he's given us a little kind of a gold nugget here. Keep your eyes on Binance and BNB. Get your funds off of Binance. Get your stuff on a ledger. I trust only Coinbase and Uphold right now. And I will short Binance token to the ground if we see a narrative being built, just like how FTX dumped off crazy and how Luna dumped off crazy. If I see something as far as BNB goes and it looks like it's going to dump off crazy, I will short that to the ground, because that token has been it's so overvalued. It's like, I think it's at like what, $200 to $400, somewhere around there. Yeah, it just should not be at those levels. And I will gladly short that down to $40. And I will keep you guys updated on that if I see it ahead of time. So join the Discord. The link will be in the bio so you can get updated in real time with the trade alerts and stuff like that. Then we have Nigeria announces new cash withdrawal restrictions. ATMs limited to less than $44 per day. They're trying to lock you in this new system. And the new limits, which are in line with the CBN's cashless policy, are set to become effective on January 9th, same day as the flare distribution. So yeah, they're trying to lock us in the system. This is what they want us to go digital with the central bank digital currencies, and then for them to impose whatever they want on us, basically. All right, so I'm going to end it off right here. I might do a follow-up newsletter before the deep dive. Yeah, I'm going to do a follow-up newsletter, and then I'm going to do the deep dive on the Basel III Accords, because I found a document. Nobody's found it. I've found patents. I've never seen them before, and you guys are going to be very interested for that video. So if you haven't already, subscribe to the YouTube, click that bell, get notified right when I post. And then also too, if you want to get updated about a potential Binance short to the ground there, join the Discord. Link will be in the bio. Come in and get updated in real time with that. So I will see you guys in the next video.